Okay, welcome everybody. What we're going to go over today is my market profile in my live day trading room. If you want to visit us, come to daytradingthefutures.com. That's daytradingthefutures.com. 50% of my live members over the last couple of years concentrate on the euro and also crude oil. So all you crude oil and you euro traders, we utilize market profile. And what's unique about my system is that typically everybody has a 30-minute market profile, but I have the institutional market profile, what the actual institutions will look at when they buy and sell. Back in the early 90s, a lot of the moves were predicated in the market by floor traders, and now nearly 80% of the market is now the moves are predicated by market profile in electronic high-frequency trading. So we moved from going from a almost total floor trading, aspect of the business to a total electronic high-frequency algorithm-based trading that happens with these hedge funds, institutional traders, and high-frequency traders. What my indicators allow us to do, my members in my live trading room, is it allows us to find levels as a leading indicator to be buying and selling intraday on the crude oil and euro markets. The one thing you have to understand, the difference between market profile and indicators is this, is that indicators will never, ever tell you when to get in and when to get out of the market at highs and lows or even in trend or chop days. They're lagging indicators. If you have a system that is based just upon indicators, you are behind the 8 ball in the market. What you have to do is you have to utilize market profile. What market profile does, it actually gives you a blueprint or it gives you a roadmap per day for my members in my live trading room that view my screens. It gives them a roadmap for the day, when they need to be buying, when they need to be selling. In other words, it gives them high probability areas where the institutional order flow is. The key for you as a trader is this: you must trade around institutional order flow. Okay, the fact is 90% lose in this. Okay, as far as futures, stocks, it really doesn't matter. It's the same old story. 90% lose, 10% win. How can you be part of the 10% for 90% opportunity? Well, you can't do it by indicator based. If you get a trading system, whether it be TradeStation, whether it be NinjaTrader, Interactive Brokers, I don't care who you use, they give you all those free indicators for a reason. They just don't work. You get these free indicators. If your system is based upon a MAC, a moving average convergence divergence, or if your indicators are based upon a stochastic, or you're based upon a RSI, or all these other indicators, or a DMX, or using all these crazy different indicators, or if your indicator is strictly based upon divergence, okay, or by itself. In other words, the indicators are lagging indicators, or moving averages. Okay, you see a lot of systems out there that use different types of moving average systems, etc. The bottom line is, if you're using that type of system, indicator-based, then you are a lagging system. And we've seen all the way, my partner and I, we've seen systems all the way up to $30,000 that are lagging systems. The bottom line is that you cannot trade the market unless you know where the institutional order flow is. And that's what market profile does. So we're going to touch base right now on a short video exactly what market profile does for us in my live room. But if you want to visit us at daytradingthefutures.com, I have a video that goes over my entire setups for 2012. We've used the same exact setups in 2011, and we're using the same setups in 2012. I only have a few setups I look for every day in the market. All right, this is Friday's market in crude oil. These dots automatically plot. Back in 1985, the CBOT allowed us to get the inside track of the market. In other words, market profile. And this was basically created by a floor trader, or actually CBOT trader, from 1959. He was a floor trader from 1959 to 1985. And that's really where market profile was generated back in 1985. It gave us an insight of the market of where the institutions are placing their order flow. How does that benefit you and I as a trader? It allows us to know where these highs are, which are these red dots, or these low probability or the high probability setups where the green dots are to buy, and to sell where these red dots are to sell. So as we move through the day, it allows us a roadmap to buy and sell these different levels with a high probability of a turning point. This is the inside track. This is not my opinion. This is not your opinion. It's the actual institutional volume. Institutional volume. They control the market. 8% of the market is controlled by institutions and hedge funds and high-frequency traders. Not you and I, and this is what we need to trade with. So these dots automatically plot for you, and they're very, very accurate. As you can see, let's go through it. I have certain setups that I utilize in the room when we reach these dots. The first setup is just right on the number. The green is support. The red is resistance. We call this high value area. The green is low value area. We have a wedge breakdown that I utilize in the room, which you can learn about at daytradingthefutures.com. Play the video. But here's a breakdown for 70 ticks off of my LVA. We look for a breakdown after the third test of that level. Then we come back up, we retest that level almost to the exact tick. This is a leading indicator. This indicator was on here the whole time. So at 8:45, I knew this was major resistance and major support. So once we broke through support, we knew this was major resistance. We can take the sell right at the next resistance. So it come up right to the tick, rolled over for 40 ticks. That's $400 per one contract in crude oil. Comes up again, test, rolls over. The third test I teach my traders, if it tests these high value, low value areas, they should look for a wedge breakout or breakdown, which happened over here for 70 ticks. Then we come into a wedge breakout, which I have a tick chart to get you in on the wedge breakout. It got us in with a small stop right here. Explodes 50 ticks up to my control point. My control point's the highest volume traded with institutional order flow during the day. Remember, I don't utilize a 30-minute like normal traders do. This is institutional order flow. It comes up, almost stops at the exact tick for my traders. They know to look for a certain setup. It comes 50 ticks back down to my control point now. Control point is major support after you get above LVA and get through it, retest it. I teach you this in my live trading room. Comes down to almost the exact tick, moves 80 ticks all the way up into my HVA, high value area. Once again, it stops to the exact tick. We knew this level right here. Okay, I typed this in my trading room at 10:24 a.m. Eastern Standard Time. 10:24, right here. This is how leading market profile is, right here. Right when we broke through LVA, I said I'm looking to sell HVA. I'm selling HVA. Now this at the time was 98.30. I'm trying to sell 98.90. A lot of traders would think you're crazy trying to project a 60 ticks ahead of time and an hour ahead of time where you're going to sell the market. I sold the high to the exact tick. My members in the room sold the high to the exact tick if they're paying attention to sell the HVA on my post at 10:24. How did I know right here at this level at 10:20 to sell this Friday? How did I know that? What differentiates me from the average trader? Because I'm utilizing market order flow. It's not that I'm smarter than every individual out there, and not like my members, predict this market, that we can predict the highs and lows every day. What we do is, it's not about us, our opinion of the market. Our opinions mean absolutely nothing. All we're reading is market profile. That's all we're doing. We're letting the institutional order flow dictate a leading indicator by telling us, hey, this is a breakdown. This is a retest short. This is a breakout on the third test. This is a retest short. This is a retest long. This is a retest short. That's all we're doing. We're letting it come in. In other words, you have no subjectivity with my system. There's no, well, should I buy and sell now? Or should I, where do I buy and sell? Where traders get into trouble is they try to buy and sell in these pockets in the market where there's no support or resistance on institutional order flow. What you need to do is you need to be buying and selling at these levels where these arrows are. Okay? So what it does, it allows you to get into the markets, okay, at exact levels with no subjectivity. There's no wondering. This is a roadmap. This is a blueprint. It told you at 10:24, I said, hey, sell HVA. I called the tick to the high to the tick at this level right here. High to the tick to this level at 10:24. Almost an hour ahead of time. Who can do that, right? What indicator can tell you that? Matt can't tell you that. Stochastics can't tell you that, right? Only market profile can tell you that. And then I've got these dots to help you out, okay? So oils, this is 350 ticks of opportunity. I teach traders only go from 8 to 11 a.m. That's all you need to trade every day, 8 to 11 Eastern, only 3 hours. Okay, that's 350 ticks of opportunity in market profile just on Friday. That's $10 per tick, $3,500 per one contract potential. Okay, play my video at daytradingthefutures.com for my exact setups. Now, what is interesting is this, is that not only do I give you that, I give you the main number for overnight trade, okay? At 6 p.m. Eastern Standard Time every night, I give you one number to look for major inflection point. This is on February the 3rd. At 6 p.m. Eastern, I gave this number right here, okay? I gave this number out in the trading room, and I put it under the announcements, and I also mark it on my chart. If it touches that number, if you're 40 ticks away and touches it for the first time, you're going to have a major move in the market. This is almost 100 ticks. This is almost 100 ticks, right to the tick. Euro, I did the same thing. Euro, I did it Friday. This is Friday's number. At 6 p.m. Eastern, how can I predict the high in the Euro almost to the tick? How can I do that? Way ahead of time. Okay, 8, 9, 10, 11, 12 hours earlier, because I'm trading with the previous day's institutional order flow. I knew this was major resistance. Euro comes up. That's the high of the session, and it moves all the way down. All the way down. 32.85, swing low 31.57. Off my main number, I gave you sometimes 12 hours before, okay? So I utilize not only the previous day's market profile, I have what's unique about me. I project this off of a 5-minute chart, the swing highs and swing lows, okay? And then once we reach those levels before I go, there's a way to pull us in the trade with small stops. We use a divergence indicator. As I came into my main number, my HVA that I called out an hour beforehand, as we got up to this number, I look for divergence. This is a lower high on my leading divergence indicator below, and it hit the high to the tick and rolled over big time. So that'll do it, everybody. Please visit us at daytradingthefutures.com. I'm going to be updating videos every single week now. We have a lot of members in my live day trading room. If you want to come in for a 3-day free trial, go to www.daytradingthefutures.com. We are also setting up a blog. The blog, I will let you know in the next couple videos, and we'll go over that also. Everybody, have a great, wonderful day, and remember, indicators will not tell you turning points in the market. They're lagging. You need a leading indicator. We use market order flow, also the market value, or the market roadmap, which is market profile. Okay, it's very unique that I have, that you just view my screens in my room, and you place your trades on your own dome, and that gives you the high probability trades that you need to be successful in the futures market. Everybody have a great day. Take care.